the economy in the U.S. is strengthening. Let's talk about the Journal's latest economic survey. Number 2 story in the Journal today. The Journal's forecast pointing to 3% growth this year. That's up from 2.4% last year. Economists are also saying that the unemployment rate will fall to 3.6% by June. That would be the lowest level in nearly 50 years.
Right.
Pretty incredible stuff here, John. But I was reading, I mean, while the economists are boosting their near-term projections, they're also thinking that things slow down quite a bit in the next couple of years. Tell us about that.
Right. So, you know, economists are reacting to what they're seeing on the ground. And, I mean, it's clear the economy had a great second quarter, growth of more than 4%. They're responding to that. You know, it does look like the tax cuts have boosted consumer spending, sustained pretty strong business investment. It does look like we are having one of the best years we've had in this expansion and beyond in 2018, and they're responding to that. The big question is whether that can be sustained, and that's where there's a difference of opinion here. So the private economists that we talk to have lowered their forecasts out to 2020 to 1.8% growth. So we go from 3% to 2.4 in 2019 and then 1.8 in 2020. So what they're saying is this burst that we're having right now won't be sustained. What the Trump administration says is that it can be sustained, that tax cuts and deregulation is going to improve worker productivity. It's going to draw more people into the labor force, and we're going to have a sustained period of very strong growth. These economists are raising questions about that. They're saying they don't think so. They point to 3 issues that could knock the economy off. One is the fiscal stimulus that we have. It kind of peters out after a couple of years. So the biggest impetus we get from that stimulus is right now. What happens in 2020 when that wanes? Another worry is trade wars, which we have been talking about a lot. And the third is that the Fed has been raising short-term interest rates 3% by 2019. Does that slow the economy as well?
I asked Stephen Mnuchin about this. I've asked so many people in the administration about this because we've been saying just this, John. And it happened after Robert Kaplan joined me, the president of the Texas Federal Reserve, the Dallas Federal Reserve, and he said exactly those numbers. He said, yeah, we're going to see 3% in 2018, but by the end of 19 into 20, we're going to see growth drop all the way down to 1.8%. That was from Robert Kaplan, who was on our show, and said that. And when I asked Stephen Mnuchin this, the Treasury Secretary, he said, I don't see it.
Right. Exactly. So there's a difference of opinion between the Fed and the White House and between Wall Street and the White House. And there's a lot at stake in this. You know, we have the White House acknowledges that we're going to have trillion-dollar deficits for a couple of years, but they say those deficits are going to disappear over time because we're going to have sustained strong growth. If we get the sustained strong growth, they're right, the Fed is wrong, and we have a much better budget situation. If the White House is wrong on this, then we have a big budget problem looking out. You know, and this also has a big impact on well-being. You know, if we get the 3% growth that we're talking about, the economy doubles in size over 24 years. If we have the 1.8% growth that the Fed is talking about, it takes more like 36 years to get that kind of economic growth, you know, a doubling of size. So there's a lot at stake here. The forecasters have been wrong before, so, you know, we can't say that the Fed, just because it says this, that it's right.
Right.
You know, someone is right and someone is wrong, and we're going to have to wait a couple years to figure out who it is.
But John, it's unthinkable. It would be stupid for anybody in the administration to talk down the economy. Again, there's something to be said for, hey, reminding people, you know, that's the job of the left-wing media, is to talk down anything good that is happening in this country in terms of people's finances. And a rising tide lifting everybody's boat, with the unemployment rate of Latinos falling in the most recent month, women falling in the last month,
African-American, right?
People with just high school educations falling in the last month. It is their job to remind people, hey, 90% of you out there working are seeing bigger paychecks this year than you did because of the tax reform.
They better do that going into the midterms, Dagan, because they're not getting that from the mainstream media.
All of the concerns that John raised are legitimate, but I think it's fair to say that economists through this administration have consistently been lagging indicators.
Yeah.
They don't see it until it's already biting them in the butt, and then they inch up, but they don't quite ever catch up. This is a climb a wall of worry, rising market. I would be much more concerned if the consensus were for perpetual rosy future. That's when I would start to be very nervous.
All right, we'll leave it there. John, great to see you. Thanks so much.
All right,
Have a good weekend. John Hilsenrath, Wall Street Journal.